Ladies and gentlemen, good day and welcome to IndiGrid Trust Q1 FY25 conference call hosted by Nuvama Institutional Equity. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sukhdev Mitra. Thank you, and over to you, sir.
Thank you. Good evening, friends. On behalf of Nuvama Institutional Equities, welcoming you all to the first quarter FY25 results conference call of IndiGrid Trust. We are joined today by the top management of the company, represented by Mr. Harsh Shah, CEO and whole-time director, Mr. Naveen Sharma, Chief Financial Officer, Ms. Meghna Pandit, Chief Investment Officer, and Mr. Satish Talmale, Chief Operating Officer. I would now like to hand over the call to Harsh for his opening comments. Over to you.
Thank you. And thank you everyone for joining the first call for financial year 2025. I will follow the slide numbers and I'll open the call and I'll then subsequently have the management team talk about the business. I'm on slide number 3. To reiterate, our vision is to become the most admired yield vehicle in Asia, focusing on the business model, value accretive growth, predictable distribution, and optimal capital structure. On slide number 4, based on these 4 pillars, we have built a large portfolio which has been spread across India, put together 29,300 crores of AUM, around 49 lines and 8,700 circuit kilometers, 15 substations encompassing 22,500 MVA, more than 1 gigawatt peak capacity on solar, and 400 megawatt hour of battery storage projects that we recently won. Our portfolio is unique. The transmission assets offering a perpetual contracts on solar side, still having a residual life of around 19 years, and sizable amount of metal that we own in our portfolio. On slide number 6, where I'll take you through the quarter 21-25 highlights. The first one, on the portfolio side, we have signed the battery energy storage purchase agreement for 180 megawatt, 360 megawatt hour BESS project awarded by GVNL in quarter 4-24. This is significant because this signifies that the project is going to be built and the customer is ready to support that and the agreements are signed for it after the bid. On the financial side, this is the quarter in which we are seeing the full impact of acquisitions of Virescent and RSUPL, which we did last year, and therefore on a quarter-on-quarter comparison versus last year to this year, we have delivered a growth of 32.7% on revenue and 35.2% on EBITDA. On AUM side, our AUM stands at 29,300 crores with a net debt to AUM at 61.3%, which leaves a sizable amount of headroom for us to grow. On the collection, we had a very good quarter. Typically, the quarter 1 is relatively weaker, but in transmission, we had 94% collection, and in solar, we have 104% collection, which has resulted into a sizable amount of NDCF for this quarter as well. On the DPU, we have distributed the first 3.75 rupees a unit DPU, which was as per our guidance of 15 rupees a unit for this financial year, which is almost 78% higher than the quarter 1 of last year. So there is a significant amount of DPU growth that has been delivered for this year based on our acquisitions and growth for last year. On operating side, our average quarterly availability is at 99.4 and solar CUF is maintained at 25.6%. On the next slide, I'll take you through Indian transmission sector opportunity landscape. We are very uniquely placed in the entire energy transition journey. Energy transition is absolutely critical and imperative for India, considering one, the climate goals that the country has undertaken, and also energy security, which allows India to be energy independent if the energy transition is done rightly by 2047. The goal of 500 gigawatt, which the government has put in by 2030, is certainly steep, but on the path of that goal, there are significant amount of investment that is taking place in the areas in which we focus, which is solar, transmission lines, which will enable the energy transition, and battery energy storage, which will ensure that renewable energy can be deployed in non-natural resource available hours. With that, as you see on the slide, there is a rapid increase in power demand that is we are witnessing as a country, which the country is responding by putting in greater capacity addition, which is resulting into sizable amount of investment opportunity for us, for transmission networks as well. Also on the renewable energy side, the battery energy storage reaching grid parity levels is really putting a lot of wind in the wings to ensure that more and more utilities are coming with battery energy storage proposals. And we do see this as a significant part of our transmission growth. On the slide number 8, as you can look at it, based on the tailwinds that we are seeing in the sector, there is approximately 96,000 crores of transmission and BESS sector bid alone that we are witnessing over next year or two. And this is, to put things into perspective, is, I would say, one of the highest level of bidding activity that we have seen in last 10 years. To just put in context, in last 10 years, pretty much total projects house that was bidded out was in the range of 1 lakh to 1,25,000 crores. So we are seeing that kind of activity coming to market in next couple of years. So that's a significant opportunity for players like us to find growth opportunities. I would just take a pause at the summary, and I would take you through. I would take my team through the quarterly performance. I would invite Satish, our Chief Operating Officer, to take you through our operating performance.
Yeah. Thanks, Harsh, and good afternoon, everyone. I'm on slide 9. I'm glad to share the operational performance for quarter 1. So we had 0 incident quarter in terms of safety. And as we continue our path on zero harm objective on EHS matters. On performance, we achieved 99.4 as a overall portfolio level availability. As you can see on the right side of the chart, there are 3 assets which contribute this slight dip. I think 2 of which, like JKPTL and Parvati, those are commercially indemnified because of force majeure event and line diversion event, respectively. On ENICL, we had conductor snap, and because of that, the availability is down. But I'm confident that over the year, we will get back to our target of 99.75. On solar generation, we achieved 472.6 million unit, which is almost close to our plan at a 25.6% CUF. On reliability, typically because of the change in climatic patterns, the natural events like lightning, thunderstorm increases. And this pattern we are seeing for last couple of years, and it's changing. And because of that, the number of trips have little gone up high. But we will kind of match up to our annual target of 0.18 throughout the year. Substation-wise, I think it's pretty much lower compared to the benchmark what we have in the industry. On cybersecurity, glad to share that for all our solar assets which was recently acquired, we completed certification process for cybersecurity risk mitigation measures. Yeah. That's it from my side, and I would hand over to Mr. Naveen.
Yeah. Thank you, Satish, and good evening, everyone. We are on slide number 10. Another strong quarter with consistent performance. we have recorded a revenue and EBITDA of rupees 835 and 767 crores respectively, which translates into 33 and 35% YOY growth. NDCF generated for the quarter was rupees 313 crores, and board has approved distribution of rupees 3.75 per unit, which translates into DPU growth of 9% on YOY basis. Coming on to collections for the quarter, it stood at 94 and 104% respectively for transmission and solar business. For trailing 12 months, collection performance at entity level stood at more than 100%, with both business segment having similar collection performance. The DSO as of 30th June stood at 51 and 45 days respectively for transmission and solar business. This reflects substantial improvement in DSO in both the business segments on YOY basis. Coming on to next slide, number 11. DPU for the quarter is rupees 3.75 per unit. It will be distributed in form of interest, dividend and capital repayment, which is rupees 3.19, 0.21 and 0.35 respectively. The outstanding units at the end of the quarter is 78.37 crores, and the gross distribution to all the unit holders comes to rupees 294 crores. Record date for the distribution is July 30th, and tentative date by which the unit holder will receive the distribution is August 8th. NAV as of June 30th stood at rupees 143.98 per unit. During the quarter, as part of the standard process, the independent valuer reviewed comparative benchmarks for the valuation of transmission and solar business. To widen the index, they included PowerGrid InvIT in the group of companies used for benchmarking. Consequently, the beta was reduced, leading to a lower weighted average cost of capital and therefore a higher value of AUM. This has contributed to the increase in AUM and NAV during the quarter. Post the quarter's distribution, IndiGrid would have distributed rupees 89.78 per unit, with a total distribution of around rupees 5,240 crores. On the right hand side, we showcase the trend of distribution year-on-year basis, which is stable and scalable growth of 6% over the years. We are on next slide, number 12. This showcase a waterfall from our EBITDA to the NDCF generation and distribution. At an SPV level, we have a consolidated EBITDA of rupees 770 crores, net of the finance income, working capital movement, capex and tax at SPV level. NDCF generated at SPV comes to rupees 725 crores. The net of the trust level expenses, finance costs, DSRA, working capital movement, tax and debt repayment, we have generated NDCF of rupees 313 crores. In Q1 FY25, we have added rupees 19 crore to our reserves, and closing reserves stands at rupees 483 crores, which is in excess of one quarter's DPU basis current guidance. So that's all from my side. I hand over to Meghna to take the subsequent slides. Over to you, Meghna.
Thanks, Naveen. Hi, good evening, everyone. I'm on slide number 13, which reflects the position on the balance sheet. We continue to remain AAA rated by all the three rating agencies. Our average cost of debt for the quarter ended was about 7.74%. The cash balance was at around 25.54 billion. Of this, almost 10 billion of debt was raised in June and which was already utilized for debt repayment in July, which because of which you are seeing slightly higher number on the cash balance. The fixed rate borrowings continue to be almost 3/4 of the borrowing book. The leverage ratio reflected through net debt to AUM is about 61% and a very healthy EBITDA to interest coverage of 2.03 times. The gross borrowing is about 203 billion, which is split 50-50 between NCDs and bank loans, and both sets of NCDs and bank loans are diversified through various investors including mutual funds, insurance companies, PSU plus private sector banks. At the bottom of the slide you can see the repayment schedule, which again we have ensured that there is no bunching up of maturities happening, and in no single year is the refinancing going about 12 to 13% of the gross borrowing, which is what we have been communicating all throughout. So overall, a well diversified and termed out borrowing profile which continues for the quarter as well. Going to slide number 14, in terms of our total returns reflected from the distribution, which is the dark blue part and the price change. So the total returns on an absolute basis clocked is about 125% since the time we got listed in 2017, as reflected in an annualized return of about 12%. Compared to all pure play debt instruments and pure play equity, if I look at the risk adjusted total return, risk being reflected by beta and IndiGrid's beta being very close to 0.08, you can see that IndiGrid continues to outperform all the other indices on a risk adjusted basis. Coming to slide number 15 in terms of the business outlook that we are looking at. From a portfolio strategy perspective, we continue to focus on ensuring that the operations remain stable and we are able to provide for predictable and sustainable distribution, and at the same time looking at value accretive acquisitions which we have been doing. On the greenfield side, as you all know, we have 3 transmission projects plus certain augmentation works in our existing projects. So smooth execution on those projects continue to be our focus. In addition to that, the 2 battery energy storage projects, which also we have won in the last quarter, those remain on stream and in the right, we are looking to execute that. Parallelly, we are also exploring partnership opportunities for these greenfield projects to ensure how we will be able to minimize risk and at the same time achieve scale. Of course, participating in other greenfield bidding opportunities which we have seen in terms of the tremendous transmission bids coming up continues to be an area of focus, both on the BESS side as well as transmission side. Also look at delivering DPU guidance of 15 rupees for FY25. On the balance sheet side, like always, we will focus on ensuring that as and when there are refinancing opportunities or opportunities for acquisition, how we are able to optimize the interest cost and elongate tenures, and at the same time consciously manage the leverage ratio to ensure that enough headroom is available for growth purposes. Asset management continues to be a very important area by ensuring we maintain 99.5% availability across the portfolio. Looking at self-reliant O&M practices which we have imbibed across the portfolio and continue to optimize on the digital tools which will help us on analytics and decision making. EHS, ESG again goes hand in hand with the asset management practices, and we are increasing our focus areas on this. Industry stewardship again remains an area of focus in terms of figuring out what more private sector participation can happen in the electricity sector, both on the greenfield side as well as on the national monetization pipeline. And parallelly, specifically for InvITs, how do we increase awareness and investor education again remains an area of focus. Moving on to slide number 16. This basically showcases how on the back of value accretive acquisitions which we have been doing since the time we got listed has enabled us to consistently increase the DPU and also increase the longevity of this DPU. So the various color graphs that you see reflect the acquisitions that we have done over the last 6-7 years. And on the back of these acquisitions, how we have increased the DPU, and you can see the DPU longevity, how that has extended on the back of these acquisitions and the growth on DPU that we have provided for. I will take a pause here and leave the room open for Q&A now. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravish Chandra, an individual investor. Please go ahead.
Yeah, good evening, Mr. Harsha and the team. Congratulations for the excellent revenue, P&L, and DPU increase. In fact, I am observing from 11.75, 12 rupees to 15. It's a good achievement. Congrats. And also, I think the management team has purchased the units very recently in this quarter. It's actually excellent for the investors' confidence. We are getting a lot on this angle. Okay, my question is, it's maybe a repetition in every one. Now we have AUM of around 29,000 crores. So potential is very high, 96,000 crores in 2-3 years. So we have headroom only to go up to 70% debt. Right now we are at 61%. So if you have a huge asset in the bidding process, if you get, then immediately we may have to do something like rights issue or something like that. Harsha, how we can work situation? And second point, recently finance minister told that asset demonetization need not be only a selling. I think it looks like that last year we had a discussion that asset sale might not happen, asset lease might be there in the pipeline. Is it true? Any thought on that? Thank you.
Thank you. Thank you, Ravishji. I think to answer your first question, you're right. If there is a significant size asset that we are looking to acquire, we may need further capital issue. However, that number is in the tune of 7,000-8,000 crores. So I think we don't foresee any one acquisition of 8,000 crores in near future, which can really necessitate the need to raise capital. We are looking at several growth opportunities, but none of that to the size of the tune of 8,000 crores, which is the capital at which we would need to look to raise capital. Having said so, we have raised capital in the past via rights issue, preference issue, QIP, a variety of methods, and our unit holders like yourself have been kind enough to support us in different capital raise processes. So if at all, and I hope we do get opportunities of 8,000 crores and more, we would come back to market when we have to, and that will be a good scenario as we grow further. On your next question on monetization, I think in general government's monetization program has been on and off with mixed reactions from several quarters, and certainly on transmission side it's been I would say lukewarm to say the best, and there are structural issues with respect to that. Having said so, if the government already has published a policy of monetizing transmission assets on lease model, we would be keen to participate on that. So as and when that takes place, we would really look forward to participate. However, the timing of it will remain in the hands of the government.
Yeah, I can understand. Thank you. Let's hope for the best to happen. Thank you.
Thank you.
Thank you. The next question is from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Yeah, hi. Pardon if some of my questions are a bit basic. I'm a bit new to the company. So my first question is regarding the assets that we've been acquiring lately. So we've been acquiring solar assets, and now we are embarking on greenfield BESS projects as well as transmission assets. This is while we talk about a huge transmission opportunity. So when do we see this transmission pipeline come on stream for us to be able to acquire some of the already operating transmission assets?
Great. So I think I would answer this in two parts. One, transmission projects typically have a life cycle, or rather the construction cycle of 24 to 36 months. And usually the monetization takes place 6 to 12 months after that. So it's like a 3-year cycle. So that's all the pipeline that gets bidded out eventually, if it is to players and developers who wants to monetize, come to market about 3.5 years from the date of the bid. Having said so, as you can see in the outlook slide which Meghna described, and also we have been acting on it, that we are bidding for transmission assets on our own, which means that we don't need to depend on the scale of transmission line because we control the quality, we control the returns, and we build on the asset upfront. Having said so, we have limited capital that we can deploy on the under construction side. And therefore, we are also exploring partnership opportunities at the development projects, which minimizes the risk at IndiGrid because we are sharing the risk capital with other investors, and which enables to do much larger and more projects, right? So we would look to participate on transmission side, on greenfield on our own, in terms of ensuring that we get the assets after completion. However, we are mindful of the fact that there is going to be limited capital that we can deploy on development side. We would look to partner with developers who would partner with us at development stage and provide us risk capital. And after completing, we will buy those projects and add to our pipeline. So it depends on what is going to be our success in the bidding and eventually execution. That will define how much of the pipeline. But in either of the cases, the pipeline that we are seeing today of around 1 lakh crore takes, bid out around a year and a half, and then subsequently around 3 years to monetize. So I would say it will start giving in sizable amount of results in anywhere from 3 to 4 years.
Okay, so near term, at least in terms of transmission assets getting into our operational portfolio, would be a little on a slower side itself, right?
Depends. See, we already have around 2,000 crores of assets that we are already building, right? That will come in next 12 to 18 months to fruition. So we'll start generating EBITDA. Those projects we already won last year, right? So they will start generating in next 1 year and start hitting our NDCF line. And also there are projects which are bidded out earlier, which may come for monetization, but we don't control the time for it, right? And therefore it's difficult to guide. But we ourselves already have around 2,000 crores of assets, which we are executing right now, which will come for us to yield NDCF out of.
Understood. And secondly, on the solar asset side, I just wanted to understand, would you, given that all of us are aware that the solar tariffs are linked more to the production, which tends to be a little variable, and also there are questions regarding the productivity of these cells, solar cells keep going a little down due to maybe wear and tear over years. So how does one solve for this operational variability on the solar assets would be higher than on the transmission assets? That's one. And second, what is the kind of IRR we end up making on solar assets?
Sure. So I think one, you rightly answered the question. There is very little variability. It's not variability which we need to worry about, especially if we are able to, we are assuming the right assumption at the time of acquisition. We are buying projects which are built well, and we are, I would say, doing the technical diligence well. There is limited variability in the solar projects. I would compare it with any other renewable energy projects, whether it's hydro, wind, solar has the least amount of variability. Second, solar generation has a very, very long track record now in India. I've been tracking this sector since 2008 when solar plants came in. It's been 16 years, and I think the worries that we carried in 2008 to 2012 are all gone because the solar generation is one of the most predictable resources. Yes, there have been variations on account of cloud cover, on account of unseasonal rains, but they are not the ones which can really impact the end result massively unless the developers are extremely levered where 1% lesser generation and you have to default. Right? So I think we aren't taking a sizable amount of risk in solar. We have about 20%, maximum 25-30% will be in that line. And a 1% or 2% solar variation, that is what we have seen in the past in very varied years. does not impact us on the bottom line. So we are fairly secured on that. Having said so, you got to check that you're buying the right modules, you're investing in that, you're cleaning it well, and all those parameters. So I think the reliability of solar modules and panels and delivering results are fairly proven now versus what it was 10 years ago. So there is a high degree of confidence in that we foresee.
And the IRRs on
IRR depends on the situation, right? I mean, I'll tell you, IRRs have changed materially depending on the interest rate, depending on the desperation of the seller. So it is dependent on the macroeconomic cycle in which we buy the asset. So we would have bought the asset at 13% also, and we bought the asset in which we made 20% also, right? So it is subject to the opportunity that we receive. And I think the IndiGrid, and for that matter, anybody who wants to make a differentiated return, got to have patience. And with our size, scale, and assets, we have patience. We are in the market. We don't get desperate when the prices go bad. And we are there to acquire each asset as long as the pricing is right. And that allows us to have windows of opportunities to acquire reasonably good IRR projects, right? So as I give you a range, it can be 13%, it can be 20%, but it depends on the situation, right? Our focus is on making a differentiated IRR.
All right. And my last question before I join back with you. So I believe around 78% of our debt is fixed rate, right? So how, would the benefit of lower interest rates going forward in case there's an interest rate cut, would it not flow much to us? How do we plan on?
So it is opportunistic, right? If interest rates are reduced by 1%, we have about 20,000 crores of gross borrowing. Does not mean that our interest will come down by 200 crore the next month, right? There is a transmission process that will take place. About 28% or 22% is immediate pass-through, so which would be immediate pass-through. And subsequent one, as the things get maturity and refinancing window, reset window comes in, we can exercise certain options to really take advantage of that. And certain debt is such that we can never refinance because we prefer to have long-term fixed borrowing. So we have taken certain calls which are anyways very good rate. So we may never refinance. So the exact math we haven't calculated, but my guess is that if the interest rates are 1%, it will take around a year or two for us to have a 50% of benefit on the portfolio on that.
All right, understood. Thank you. This was really helpful.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon and congratulations on a good set of numbers. Just two questions. One is on this asset pipeline visibility. So you mentioned 2,000 crore, which is going to come up next year. But apart from that, from the bid pipeline or something, if you can sort of give some estimate of what is the visibility that we have at the moment about the addition in our AUM. So that is one. And secondly, this jump in NAV. So I'm guessing this is because the beta of Power Grid InvIT was much lower than the other. So what is the rough, number of beta or the amount of beta that has been used for these calculations, and what was it roughly before that?
Sure. So I think to your first question, we don't forecast on growth. We don't give projections on what number of assets we are buying. We buy, we bid, and we win, and we communicate. But just to give you a picture, it's been 7 years since we listed. We are 7x in size, right, from the time we listed. So give or take every year, we have grown by 3,000, 4,000 crores at any point in time, and sometimes more. Now, why I said that is that we are dependent on opportunities that are there in the market on M&A side. Also on the bidding side, while we do bid for it, does not mean we have to bid to win. Our focus always remains on, are we getting differentiated return? Are we getting risk-adjusted return, which is superior to where we are trading at? And if so, we have a larger appetite to do. And I think the dependence for you as well as we management, the core belief is that as long as we follow that philosophy, there are going to be businesses in the market for us to acquire and grow. Beyond that, I think it is, I won't say impossible, but it is something which as management we do not guide on that this year we are going to acquire 5,000 crores of assets or 8,000, or we are evaluating 4,000 crores in DD and variety of things. So we don't like to project that, but if at all history is any measure, we have grown every year by a few thousand crores. So we are confident that the market is huge. There is tailwind in the sector. There is investment happening across sector, across every aspect of electricity value chain that we see. We think we have the right team, acquisition growth and engineering capability. So I think when all of this meets, we'll end up growing the portfolio. I think that's the belief under which we operate. So I think that's what is more prudent to follow. On the beta front, I think I'll invite Naveen to brief the exact number, but I would urge you to look at the valuation report, which will have exact methodology and the numbers and everything, so that in case we err on the phone on some numbers, etc., you can check on the valuation report itself what is done. But Naveen, over to you.
Yeah. So broadly, PGCL beta, unlevered beta was close to 25 bips, which was taken in the month of March. And Power Grid InvIT, this has reduced to around 0.19 or 0.20.
So 20% reduction in that.
Yeah, close to 20% reduction, on overall working, this has an impact of around 10 rupees on NAV.
Understood. So Harsh, just on the first answer to the first question, I think the transmission sector we were seeing some. I mean, it was challenging in general to sort of acquire new assets. So are you seeing any positive or negative changes to that, which the environment which was existing before, maybe a few quarters back? Are there any changes in that environment, or is it broadly the same as of now?
No, I think in last 4 quarters, if I compare, what has changed is that there is tremendous pipeline, right, of assets, and the bids are happening. As you speak, every month there are few bids, and these are all public bids, so the bids are happening. So in general, the capex of the sector has gone up. Is it competitive? Yes, it is competitive. So I think that competitiveness remains. So one needs to find out assets where we are more better placed than others, and we bid for it. So I think it remains a competitive place. Having said so, the market has become large, so that offers opportunities for everyone.
And if the bid pipeline is much higher for the newer assets as well, then wouldn't it also mean that the guys who are having the assets on their book, because they would be now forced to embark on newer greenfield developments, the propensity of them to sort of download these assets to third parties like yourself should increase ideally in such an environment?
Yes, I would wish so. On paper, yes, but things move. Things take time to happen, right? But I think I would have similar hypothesis as you are suggesting.
Understood. Thank you and all the best.
Thank you. The next question is from the line of Subdeep Mitra. Please go ahead.
Thank you. Harsh, I have a 2-part question. First part is that, in continuation with the previous participant, on the same lines, are we looking at possibly seeing a bit of a lean period for the next couple of years in terms of ability to acquire more assets, or what I should say is maybe the opportunity to acquire more assets, since most of these newer transmission assets are probably in the bidding or on the construction phase today.
Yeah.
And
go on.
And secondly, when one looks at the kind of bidders who are probably bidding for these new large ISTS assets, naturally a large component is PGCIL, followed by some of the larger private names. Some of these large private names also seem to be more of hold to maturity kind of holders who may never end up downloading the assets. So are you seeing some kind of shrinkage in terms of the transmission ISTS opportunity, and hence you may need to diversify into other areas more?
Okay. Yes and no. Yes, there are players who are hold to maturity players, so they're in one time. But only thing that we have learned over last 7-8 years since we listed the market, things can change in a variety of ways. So our job is to wait for the right time and assets to come. We don't look at our business in a year-on-year manner. That this year is lean, next year is active. So we are okay for a lean year for 2 years or 1 year. There is sufficient assets that we have acquired. And even if we don't do anything, right, we don't acquire any assets, our DPU is not going to drop for whatever, 8-10 years. It's going to continue to yield results, or rather it will go up when interest rates go down. So there is enough that we have done over the last 7 years that allows us to, I don't know how to put it, but let's say time the market, right? Or what is the right time to acquire assets. So that's one. So we don't need to acquire something just to grow year on year to deliver a PAT. That's going to come from our current assets. Second, what we are doing is, instead of being a reactive player in the market where the projects are bidded out, then subsequently dependent on strategy of developer that comes to monetization, as we already done, we are trying to bid for projects ourselves. So we already executed the first project. This year we'll be commissioning 2-3 more projects. So we're already putting in projects in place on our own and adding it to, we can probably call it organic growth, right? So over the last 7 years, probably the first 5 years, we did not talk about or we did not do any organic growth. However, 2 years ago, when we started on the first under construction bid, was the beginning of our organic growth. And as we have done in the past, we start small on anything new, and when we deliver it, we grow big. That's what we did for solar. From 100 megawatt, we waited for 3 years and we did it a gigawatt. For BESS, we put in a proto in a substation, and then last year we increased it to 400 megawatt hours, and probably this year will increase more. And for transmission, we did a small project of 200 crore, and now we are doing 2,000 crores, right? And they will come in line in next 12 months as we complete the project. So that leaves us for doing more on this space on greenfield, especially if the size is large. Having said so, we completely, as I said, understand that we are not going to deploy entire risk capital on under construction projects. But with a pedigree and track record, there is tremendous amount of development capital waiting on the sideline to partner with developers. So we are working to see if we can put something like that in place, which enables us to do, or rather, instead of reactively, actively participate in the large transmission market.
Understood. And with regard to the solar and the BESS related projects, what quantum of your AUM would you say would, at max be what you would look at in those kind of investments?
Yeah. So see, BESS is transmission, and we are following MOP guideline. As long as the BESS is co-located with transmission assets, it is considered transmission. Second, BESS, the asset nature is also like transmission and substation, right? The contract is like transmission. There's take-or-pay contract, capacity-based contract. O&M is like substation. So it is more like transmission as an asset versus renewable. So there is a tremendous appetite on our end. We are building a lot of scale capabilities to both execute and manage those projects. So I would say best this is part of our base plan. We can do as much as we want as long as the returns are good. On the solar side, we will maintain around 25% ratio at this point in time. And again, opportunistically, if people ask prices, it does not make sense, we may not acquire. And if there are assets which are returning us, substantially good returns, we may acquire. So it's something which will wait out.
Understood. Lastly, any opportunity that you think is coming up on the intrastate transmission side?
Maybe on the greenfield side, but they are very puny in comparison to what we are seeing on TBCB, on ISPS. The ISPS opportunity is very big. On the intrastate side, there are opportunities, but they are small. So we would look at it, but they are relatively small right now.
Understood. Thanks so much.
Thank you. The next question is from the line of Krishna Kumar Nalamvar, an individual investor. Please go ahead.
Thanks for your. I'm not conversant with English. I just try to understand me. I am senior citizen. I want to ask that transmission assets is on build, operate, own and maintain model. And after what happens after completion of agreement, say one project is for 15 years, some projects are 35 years. So what happens after that? I want to ask, sir.
Yeah, sure. So I'll give a perspective. I would not say what happens because there are not any project which has gone through the cycle, but I'll try to predict what may happen. So our contracts are take or pay, and when the contracts are completed, the asset belongs to the company, and the company belongs to IndiGrid. So the asset belongs to you. However, the transmission assets have a very, very long life, 40 years, 50 years, sometimes more. And we believe that the replacement cost of these assets at the end of the concession period is going to be very, very high. So there will be a very, very logical sense for the government, for regulator, for utilities to continue the contract and compensate the current licensee, which is the SPVs, to continue the projects and pay them on a regulated tariff mechanism or any other mechanism that is deemed fit. In the absence of that, so I think this is what most likely going to happen, right? That we'll continue to get paid. And I don't think there is any alternative to extra high voltage transmission that has been found yet, and we are confident that there is none. So we'll continue to have relevant, meaningful play even after 25 years or 30 years.
What this assets NAV is there? So that is after that completion period that that asset becomes zero, or it is while calculating NAV. What is happening with this thing, sir?
Yeah. So asset does not become zero. There are two methods to compute the NAV or other value the asset after life, after the concession period. The one is in which we follow is that we follow a regulated tariff mechanism model that after the concession period is finished, if the capex of the project was, let's say 100 crore, 30 crore was the equity. On 30 crore, we earn around 15% ROE in the current regulated tariff mechanism. And we feel that that is what the model is justified after completing the original concession. So we continue to get paid on 15% on 30% of equity that is deployed, right? And the rest is depreciated. So that's something which we believe will happen, right?
Okay, sir. Thank you, sir.
Yeah. Thank you.
Okay.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yes.
Yeah. So I just want to understand from you the basics of the BESS project, like where are we procuring the battery from, at what cost, what would be like the replacement cost, meaning at what point in the future will there be a requirement to replace it, and what could be the cost of battery, say 1 or 2 years from now?
Okay. So, very difficult. I'll start the last question. I do not know the price of battery 1 year from now, right? If I could predict, I would be trading. So I don't know. So our business is of certainty, so we want to finalize the orders and order the battery soon. So our economics are retained. In terms of where are we going to order battery from, we are going to import the batteries. Because India does not have capacity to manufacture utility scale battery storage batteries right now. There are a lot of investment happening. So hopefully in a year or two from now, we'll be able to procure locally. What is the cost of battery? I'm sorry, but I cannot share that considering it's a confidential information and competitively bid processes take place, so it's a difficult information to share, but there are widely available public resources to look at that. I can tell you we'll be in a similar range or a little better than that, but we have not concluded the order yet. So it's difficult to disclose the price as well as disclose where we are going to end up at. But I can tell you we are ordering very fast and we are planning to commission our first project in this financial year. And once we commission, the data will become public, right? So I would urge you to wait for that. In terms of replacement, typically we factor in that there is no replacement. We do all the capacity augmentation upfront. And projects that we have won are not 20-year projects, which requires its augmentation. The projects are 12-year projects. And all the bid process allows certain degree of degradation in the battery, which is in the allowable range. So when we spec the battery, we figure out in a way that we don't have to augment it in future.
Okay. So what you're telling is for your case, you have not assumed any degradation or it will operate for 20 years without replacement?
No, not 20 years. 20 years is heavy. We have a 12-year contract. And
12 years, yeah.
12 years. And we do augmentation upfront. So what that means is that whatever the extra battery are needed, we invest it in upfront. So if for 100 megawatt hour battery, instead of 100, you have to do 110. So we do it upfront instead of waiting that we'll do it in third year, fourth year, fifth year. Because the scale or logistics of buying 2 megawatt hour each year is far more complicated than buying 110 at one go. So basically you put overcapacity upfront.
Understood. My second question is on transmission. Now, the National Monetization Policy gave guidelines to some large players like Power Grid to monetize their assets. They had plans to do it through their own InvIT, but due to some policy reasons that was put on hold. So our bid potential pipeline in the future for transmission, would it include these assets of Power Grid which would eventually come up to be monetized? And if so, when will that happen?
So I can tell you we are interested. We have also written to Power Grid and Ministry that when you monetize, we'll be interested to participate in a competitively bid transparent process. So when will they do it is in the hands of Power Grid Board and Ministry of Power and Government of India. That we don't control. But yes, if as and when it happens, we will remain interested.
So what was the policy level challenge that happened which prevented the Power Grid from monetizing it through their own InvIT? Will that be a constraint for our, say, assets which we are bidding on our own in the future?
No, not really. They are different things. At least what I understand, again, this is secondary knowledge, that Power Grid in their call said that they do not want to do a competitively bid process for their assets, which I don't know why, because they are a public company and they are supposed to call for an auction for monetizing, and don't want to call, then they decided not to monetize instead of calling for an auction. This is what I know from their transcripts, right? I don't have any other direct knowledge of that.
Sure. Okay. That answers my question. All the best.
Thank you.
Thank you. The next question is from the line of Pradumna Chaudhary from JM Financials. Please go ahead.
Yeah, thanks for the follow-up. So one was a follow-up to a previous participant's question regarding the basically what happens after the contract comes to an end. So don't you think, given that this is a regulated equity model where we've already earned a 15.5% equity on the project cost, at the end of the contract life, the government would substantially reduce the tariff because whatever we earn extra would be a bonus, right, after the contract ends?
So it depends on how one calculates that. The contract in this case was very clear that the assets belong to the transmission licensees. So transmission licensees have an option of not performing and not doing that. Right? If you don't give the right tariff, and that's why we disclose the amount of metal that we have on the investor deck. If you look at that number on our slide number 4, there is about 530,000 tons of steel and aluminum, which is real metal outside the ground, which you can really realize. If you just apply the price of the metal today, right? Obviously we would have met all our net obligations and everything. It would come to a 50% of our market cap today. So that is the size of the metal that we have in IndiGrid. Now, what will be that price at the end of 35th year or 30th year? I don't know, but it will be significant, right? So if that amount of size of capital is deployed, one says that no, you take very less return on that. Why would you operate that asset, right? And you would say, I would rather liquidate. Right? Having said so, the principle within the regulated tariff mechanism have been very clear that equity is never depreciated. Your only debt is depreciated. So if you invested 100 crore, as long as 30 crore continues to be deployed, because the 70 crore debt you amortize at the end of the concession period, the 30 crore equity has right to earn the ROE forever. That's the principle enshrined in the RTM mechanism, regulated tariff mechanism. So the equity is never depreciated, and therefore, if one gets 15.5% or 15% of ROE on the equity after paying all the tax, all O&M costs, everything put together, I think it's a reasonably good return. So we are fine with that continuing forever.
Understood. And second was, can you give us an idea regarding how much, like in rupees, how much transmission assets today are operational in India?
In India,
to get an understanding of the industry.
I think that's a very difficult question because there are depreciated assets and all. It becomes very complex. I'll tell you, high level number would be somewhere in the range of 3 lakh crore at the interstate level. And intrastate level numbers are not collated, so it's very difficult to calculate, but probably it will be again 2-3 lakh crore. So we are looking, at least, and this is my estimate based on my experience, what I have read through, there are very limited publicly available resources where everything is prepared, but I think it will be in the range of 5-6 lakh crores total, including state transcos and central and everything put together.
Understood. And how much would be with the private players?
Very limited. It will be less than at least 10%. Yeah, around 10%. Maybe 15.
Understood.
Somewhere in that range, yeah.
Understood. That was helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Tanveer Sure, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Okay. So with the recent change given the LTCG period now dropping to 12 months, does that bring any tailwind in terms of to IndiGrid, do more mutual fund participation from the equity side now come in?
Yeah, thanks, Tanveer, for asking that question. I was surprised that nobody asked that till now.
Yeah, same here. Yeah, I was waiting for that.
Yeah, no, so this has been a policy asked for last 5 years, and we are pretty happy that this has come. So I think one big thing for unit holders is that there is a lot of liquidity can come in because people can actually monetize after a year if they think the timing is right, and then liquidity will increase.
Correct.
The second is that we have been working with regulators and exchanges for inclusion in the index, because with our size, at least I don't know exactly, but we will come into top 200 or 250 entities probably, or even utilities index. But there were structural issues for inclusion of InvITs into indexes because of this 2-3 year holding period, which makes it difficult for fund of funds and mutual funds to really allow that. So the exchanges were not ready to, I would say, include us in the index. And inclusion in index would have led to more passive flows. So probably that is a good thing. While this is done, there are a couple of other policy hurdles, which is with the regulators. When done, I would certainly believe that this will have tailwinds because of more liquidity from being included in the index. So this is the first step in that direction. We truly hope that we are included in the index.
Yeah, that's wonderful, because I think globally a lot of REITs and InvITs are included in frontline indices. So that is a big plus. And now I think another check mark is just the interest rates. I think once that also drops, I think the units for REITs and InvITs should take off.
Yeah, we also believe so.
Okay, thank you. All the best.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, everyone, for joining the call and asking all the important questions. We are pretty psyched about the growth opportunities that exist in front of us, and we'll continue to deliver what we promised, and look forward for meeting you in the next investor call. Thank you.
Thank you. Thank you. On behalf of IndiGrid, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.